For more on President Trump's tariffs and the market reaction, let's bring in Peter Navarro. He is the White House senior counselor on trade and manufacturing. Peter, it's great to have you back on the show. A lot to get to with you here. But first, I just want to start with, and this is me putting my social science degree hat on here, the methodology, because it's been a big talking point both on Wall Street and Main Street today, and that is how the administration arrived at these numbers that were on the boards that President Trump put forward yesterday. I have the reciprocal tariff calculations here. It's a very fancy-looking formula, but a number of economists and media pointing to a much simpler mathematical equation. They say that it looks like the administration took the trade deficit for the U.S. in goods with a particular country, divided that by the total goods imports from that country, and then took that number and divided it by 2 to get to what the U.S. plans to implement on these 60 different countries. Is that the case?
All right, let me explain what the reciprocal tariffs are. What you have is an issue where the rest of the world, by the very rules of the World Trade Organization, cheats us through significantly higher tariffs and massive non-tariff barriers. So the significantly higher tariffs we face is an easy calculation, which all you need to do is look at the differential between what's called the most favored nation tariff rate for us, which is around 3.5%, and the MFN for other countries, which varies pretty widely. Generally, other countries have higher tariffs on us, 2, 3, 4 times or higher. And we're talking about the EU, we're talking about India, Japan, Korea. So we're in a world of unfair trade institutionalized by the WTO. So the issue is, how do you capture all of the cheating that takes place in the non-tariff barriers? And let me just say what those are so people understand how you go about thinking about this. You've got currency manipulation, you got VAT tax distortions, you've got export subsidies, you've got dumping, you've got counterfeiting, you've got intellectual property theft, you've got these phony technical standards, you've got these phony agricultural standards. And when you add all that up, you get weird things like Japan. 95% of the cars on the road in Japan are made in Japan. They have relatively low tariffs, but it's almost impossible to sell a car there. Germany, autos, they sell 6 to every one we buy. Their tariffs are 4 times higher. Plus, they have the VAT and the non-tariff barriers. So here's the thing. Punchline, bottom line. Each trade deficit we have with each country, based on the flow of imports and exports and how much we actually trade for them, represents the sum of all cheating. The trade deficit is the sum of all cheating. And what you simply do is calculate the tariff rate, which would be required to eliminate the trade deficit. And this is a national emergency based on chronic, massive trade deficits, which cost our jobs, our factories, and transfer our wealth to other foreign nations, and therefore threaten our national security, economic security. So that's the way to think about it. It's actually quite simple. Now, the calculation itself is based on this very sophisticated analysis in the trade literature for decades, and it relates to what's the various import, the elasticities, things like that, coupled with what happens to the currency. And when you get that out, you get a formula, you get a rate. And I want to stress here that the rates we got from that are basically represented based on the sum of all cheating done against the American people. There's no dispute that we get cheated. And then the president was very kind and lenient. He took half of that. But Peter, and they're customized to each country. So that's exactly what happened.
I don't think anybody's arguing that there's unfair trade practices, or, to use your term, cheating happening. But there are question marks about VAT tax, which is not necessarily a tariff trade barrier. I realize you can start getting into the argument around what VAT taxes, the money they raise goes towards domestic subsidies, but it's not actually considered a non-tariff barrier. So it raises the question. It raises the question.
Hang on. Let's focus on the VAT for a minute. You raised an interesting point. And I love, by the way, I was watching CNBC this morning, and there was this fascinating debate between Steve Leisman and Rick Santelli about precisely this issue. Now, I'll tell you, historically, that the United States, going back to the 1970s in the GATT area, has repeatedly tried to get relief from the WTO. The problem is that our income tax system is treated very differently under the rules of the WTO, and that leads to massive distortions in terms of flows of trade and where companies go and things like that. So when you say that the VAT doesn't matter, we have tried repeatedly at the WTO. They've said no relief for you, and that's part of the bigger problem. The WTO screws us every time we try to resolve a dispute over these non-tariff barriers. So please don't tell us that the VAT doesn't matter, because there's 30 years of history that says it does, and 30 years of history that says these people refuse to give us any relief. And here's the problem.
I hear you.
Yeah, go ahead, John. Go ahead,
I want to go back to the trade deficit issue, because that's a big one. You've called this a national emergency associated with chronic and massive trade deficits.
Indeed it
meaning
is.
that we buy more stuff from these other countries than they buy from us. We're a rich country. We got people who can afford to buy just about anything. We also have companies here that make expensive things. Why is it reasonable to expect that poorer countries, poorer people in a developing country should be buying expensive things from us in perfect balance with the cheap things we buy from them?
Okay, let's first observe that our trade deficits are not with the poor nations of the world. We have them.
But almost everybody's poor.
The nations of the world, we have China, the 27 countries of the EU, Japan, Korea, Thailand, Vietnam,
we're doing better than Vietnam,
India.
though.
So, okay, but here's the point, sir, and this is basic economics as well. Every economist will tell you that under the rules of free trade, it's impossible for a country to run chronic trade deficits for so long. What's supposed to happen is market adjustments and currency adjustments, yet we do that because they cheat us. Do you know how much money we have transferred since China joined the WTO in 2001 to the rest of the world in terms of our assets? $18 trillion. That's 60% of our last year's annual GDP of land, farmland, buildings, apartment buildings, assets, companies that have gone to the people who take that debt. So, the beauty of this is everything's on our side on this. There's no dispute that they have higher tariffs and non-tariff barriers. There's no dispute that we should not have chronic trade deficits.
Right.
And there's no dispute that what we're doing is fair and reasonable. Now, in terms of how the market, I'd love to talk a little bit about the markets, because I see, look, folks, just so folks know, watching this show, I was a CNBC contributor, right, going on 10 years, and my specialty was macro and talking about technical and fundamental trading and how you had to use the two. And you look at the market, the technicians are saying we're probably at or near a bottom. They're probably right. But fundamentally, let's think about
I guess that depends on what happens next, but okay.
Yeah, let's talk about the fundamentals. Let's see what we're looking at here. We've had already, and we're just getting started, $3 trillion of investment promised to come into this country. That's 10% of our GDP, more or less. That's good, and we're just getting started on that. So that's happening. Now, yields are going down today. What does that mean? Mortgage rates are going to come down. That's going to have a nice bounce for our housing sector.
It could mean people are afraid of a recession.
Gas prices are coming down. And by the way, I would be remiss in saying to you this, sir. Every single dollar that we're going to gather from the tariff revenues from foreign nations exploiting us is going to benefit the American people and American companies in the form of tax cuts and debt reduction.
Let me get another question.
That in and of itself is going to be beautiful.
On this, especially when it comes to our traditional allies. Now, in your explanation of why these tariffs are necessary, you do talk about IP theft, currency manipulation, dumping, other non-tariff barriers being worse than tariffs. I don't think you would argue that, for example, Israel is guilty of those things. So if the goal is to correct those things, why is the Trump administration inflicting economic pain across the board, including on our closest allies who otherwise might have been partners in addressing these issues?
I would argue that Israel is part of that. They steal a tremendous amount of intellectual property from our pharmaceutical companies. There's a tremendous amount of disputes. They have enormous tariffs on our agricultural products. So when it comes to trade, we have no friends. We have people who are trying to exploit our markets. And if you just go through some of the list, I mean, Japan, look, Japan's a great ally in terms of geopolitics and strategy. But why is it that 95% of the cars in Japan are made in Japan? And meanwhile, they sell us 100 cars for every one we sell them. It's because of their non-tariff barriers. We try to sell some nice Louisiana rice to Japan. There's a 700% tariff on that. Same with South Korea. Vietnam. I love Vietnam. It's a great economy, but it's become a colony of communist China. They sell us $14 of stuff for every one they sell them, and it's because they've got warehouses full of communist Chinese products that they strip off the China labels, put on the Vietnam labels, and that comes here to avoid the tariffs. In Germany, look, Germany, they came over here to build cars, BMWs and Mercedes. What do? We're their colony. We assemble them in Spartanburg, but every engine and transmission comes from Bavaria. Think about that. So this is what President Trump sees, and this is what the American people elected him to do.
Yes.
And look, when we get to the other side of this, and it's going to happen very quickly, it's going to be beautiful. The guy who almost stole the show yesterday in the speech, nobody ever steals it from Trump, but Brian, the UAW worker, came close when he explained he saw all these empty factories.
Before we let you go,
they're going to be filled up.
Before we let you go, given everything you just laid out and this restructuring of supply chains and basically the global world order and America's role in it, how negotiable are these tariffs? What does it take for countries to actually negotiate the tariffs that were just announced yesterday?
Let me make this very clear. This is not a negotiation. This is not that. This is a national emergency. And I watched a commentator today on another network who came from South Carolina who said very clearly, well, if we're going to have somebody come here and invest in a textile plant or an auto plant or whatever, they're not going to do that if they think the tariffs are going to go away tomorrow. And the reason they can't go away tomorrow is because the bigger problem is the non-tariff barriers. You think that the European Union is going to give up their protections for farmers, their protections for the tech companies, their VAT tax tomorrow? That's impossible. So these tariffs are here to protect America. They'll raise revenues for the External Revenue Service. They'll restructure not just our economy, but our tax system. And Americans will benefit from every single dollar we raise. They will have more jobs. We will have more factories. And the stock market, by the way, last thing I'll say, in the Biden regime, the S&P 500 went up, but it went up because of 7 companies, and 80% of the companies in the S&P 500 stagnated. In the Trump bullish market, which is beginning now, it's going to be a lot of companies. It's going to be all the companies in the S&P who invest here, produce here, and prosper here. And it's going to be a golden age. You had the gold rush in the 1880s. This is the golden age rush. So come on down and do it.
Peter Navarro, thank you for joining us.
Yes, ma'am.
Sounds like he just called a market bottom.